Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the 1 hour time frame with the first bullish scenario where we're looking for a 5-wave impulsive structure to the upside with inside wave 4 a complex 3-wave move in a W flat X zigzag family pattern and a triangle in wave Y. Because we're looking for a triangle in wave Y, the invalidation is this low here at 66.2k as long as price hasn't taken the high at 67.5k. Wave 4 in this scenario is also longer than wave 2, which is what you prefer to see. The vertical line on the chart is a fib time taken from the start to the end of 2 and then put on top of the high of 3, comparing 2 with 4 in time. You can see that the low over here was made before the 1-to-1, which is uncommon for a wave 4 to end over here being shorter than your wave 2, but in this particular scenario we're extending wave 4 in the WXY with a triangle in Y, nicely ending after the 1-to-1 fib time. Here we are then looking for continuation to the upside in a wave of 5, where we do have some resistance to the upside. The blue box here, 68.1k to 69.2k, and the most interesting resistance in that area is the weekly naked point of control at 69.1k. The second impulsive structure to the upside, which also still means taking the highs over here sooner or later, is a wave 1, 2, and then inside the blue wave 3 we have a finished 5-wave structure, looking for a deeper wave 4 and then a wave 5 to the upside. The conclusion, however, the result is the same. Common target for your wave 4 here is the 236 to the 05, 65.9, 64.1k, taken from the low to the high of this wave 3, with your invalidation being the 618 at 63.3k. Locally, price has hit the 886, increasing the probabilities to sooner or later take out the double top over here, looking for that wave 5 to the upside, which then on the medium time frame is finishing a wave C or a wave 1. So if we then go to that medium time frame, the 4-hour chart here, or actually the daily chart, then what we are looking for is one of 3 scenarios, but the result is the same. You're all looking for a little bit more upside before a retracement to the downside, and the retracement is going to give us all the information we need. The first scenario is a bearish scenario in a WXY. Here we have a regular flat in W, expanding flat in X, and looking for a 3-wave corrective structure to the downside in a wave Y, which most commonly is a zigzag 535, can also be a flat structure or potentially a triangle. Inside wave X we then have the expanding flat, a 3-wave A, 3-wave B, and a 5-wave C to the upside, where preferably your wave C is ending before the 2 fib time, taken from the start of A to the end of wave B, comparing A plus B with wave C. And if wave C is twice the length of A plus B, it significantly reduces the probabilities that this is a wave C, and other scenarios will have a higher probability. Common target area for your wave X is the golden pocket to the 886, taken from the high to the low of W, giving you a target area between 68.3k and 72.2k. In the second scenario, we're looking for a zigzag to the downside in a diagonal wave A over here, a 5-wave structure, 1, 2, 3, 4, 5, a zigzag move to the upside in wave B, and then a 5-wave impulsive structure to the downside in wave C, taking the low at 56k. Common target area for your wave B is between the golden pocket and the 886, taken from the high to the low of A, giving you a target area between 67.2k and 71.9k. And inside this wave B, we're then looking for that zigzag ABC, where the common target area for your wave C is between the 1 and the 1.236 trend-based fib extension, taken from the low to the high of A to the low of wave B, giving you a target between 69.1k and 71.3k. Preferably, this wave B is also ending after the 0.382. It's currently on top of the 382 here, the 19th of May, which is something that we like to see because we're still looking for a little bit more upside in this scenario, ending inside that wave C pocket before then a return to the downside. So that works nice. The fib time is taken from the start to the end of wave A, comparing wave A with wave B, and the invalidation for this scenario is price moving to the upside, taking out out the high at 73.8k. The most bullish scenario is simple. Your low is in and we're looking for continuation to the upside in a double 1-2. Wave 1 and 2 of the higher degree in green is finished, and inside the green wave 3 we have the blue count 1, 2, 3, 4, 5. The invalidation for this scenario is price taking out the low at 60.1k. Locally, we do have some CVD divergences. We have bullish CVD divergences on the chart, higher low in price, lower low on the CVD, and the target for this CVD divergence is price taking out this high over here, and the invalidation would be for price to take out the low. So if we then look at the probabilities of the different scenarios, it's at the moment very simple. We're simply looking for price to sooner or later take out the high at 67.5k, and then once price moves towards the upside, it's all about the retracement. Because in the more bearish scenarios, if wave X is finished and you look for a bigger wave Y to the downside, you're going to be looking for impulsive structures to the downside, preferably in that wave Y, looking for a bigger zigzag to the downside in a wave B, and then a wave C to the downside to new lows. You also want impulsive structures to the downside to move below 56k, but in the double 1-2 scenario, we're going to be looking for a corrective structure to the downside, and wave 2 can be any corrective structure except a triangle. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.